Hello, this is Bob Steele. In this lecture, we will be working a problem that will be similar to a homework and or assignment. The numbers will change. The format will remain much the same. This is the problem. The worksheet will look like this. We will be using an Excel worksheet. I recommend putting the information into Excel for a few reasons. It'll help for the calculations. It'll help to see relationships between different cells and how things fit together a little bit better. And it's also good just to learn Excel for things even outside of the accounting field. Also, if you need to rework the problem, it will be easier to do so if we do it in Excel. So we have the information here. What we're going to do is we're going to start off with a beginning trial balance, then we're going to put in the closing entries. So we have the adjusted trial balance at this time. We're going to input the closing entries. So I'm going to take this and I'm going to snap it on this side. I'm going to take my worksheet, snap it on this side, and the first thing we need to do is enter the beginning balances into our Excel worksheet. So it's a bit of a data entry process here. I think it is worth doing because it helps to understand the concept of the debits and credits. We're going to put the credits on this side represented with brackets as we've done in the past. That will cut down the number of rows we need to calculate this from basically 6 down to 3. So it is a practical item to do. So let's just plug these in here and see what happens. We know that it has to equal 0 at the bottom. If it does not, then either we flip the sign between a debit and a credit, or we got the number input wrong. So let's just put this in here: 52024 5168, debit of 630, debit of 1485, debit of 810, debit of 8100. Then we have a credit for there's a contra asset in the accumulated depreciation 405 21200, and then we have a credit here, the contra asset accumulated depreciation 1325. Liabilities have credit balances of 1500 for accounts payable, 460 credit. For wages payable, credit of 2100, and now we're on capital, has a credit of 68000, debit to draw 7600, credit, now income summary is going to be 0. They put their income summary down here. I typically put it up in the owner's equity section. I guess it's a matter of preference on where you want it. I'm going to put mine up here, so just beware that's a bit different in the formatting here. The income, notice income has a credit balance of 39684. Income always has a credit balance. All expenses have debit balances. So we're just going to plug in these expenses: 405, 1325, 3625, 495, 2430, 3415, 2643, 784, 200, and 1135. Now if we do that, it has to be in balance. If it's not in balance, then either we didn't represent these credits with a bracketed number, or we plugged in the wrong number. So then you got to go back and basically tick and tie out each and every item and make sure we're starting off with the debits equaling the credits, meaning this plus this plus this plus minus this plus this minus this minus this minus this minus this minus this plus this minus this plus this is going to equal 0. So once that's the case, then we can just basically open this worksheet up and go towards our goal here, which is that we are now doing the closing process, meaning that we only want the balance sheet accounts from here to here. And then this draws, which is an owner's equity account, and the whole income statement, we want to make 0. So our whole goal is just to make this 0 and put the difference into the capital account. Now we could do that with all just one journal entry. I could credit this for 76, debit this for 39, blah blah, and then debit the capital account or for the 15627. We'd credit the capital account for the 15627, but we're going to do it in a 3-step process, meaning first we're going to close out revenue, then we're going to close out expenses, make them 0, then we're going to close out the income summary, then we're going to close out the withholdings. 4 steps that we're going to do. We're going to do it as of the end of the period, which is 12/31. So, and notice this is going to happen sometime after 12/31. It doesn't actually happen on 12/31 because we have to do the adjusting entries and all the bookkeeping for the month, and then at some time we're going to close the month. And that's what we're doing now. We're closing the month, meaning we want to make all these zeros so that the next month can then be recorded from 0 on up, or the next year needs to be recorded from the 0 on up. So let's start off with this. We need to make this 0. That's the first thing we need to do. Revenue needs to be 0. Revenue has a credit balance. We need to make it go down to 0. And the way we're going to do that is we're going to do the opposite thing to it, which in this case would be a debit. And once again, I'm pointing out that I am saying that revenue goes down now, and I used to be saying that income accounts never go down. Notice, once again, it's just like a race, meaning the time or the numbers of mileage or the time always goes up until you start a new race, in which case you need to hit the reset button. That's what we're doing here. on the income statement. We're hitting the reset button, starting at 0 so we can count up again from 0. And so that's going to be the 39684. Then we're going to credit 39684 to something, and that's what we're going to do. We're going to put it into this new account, this income summary. This is what I call a clearing account, meaning we're going to put it into income summary, then we're going to take it out of income summary. So we're going to put it into income summary just to make sure that we have everything cleared on the income statement. Then we're going to move it from income summary, which will then have net income in it, to where we really want it, which is the capital account. So we're going to credit the income summary. So this is the first part of the 4-step closing process. Let's post this and see what happens. I'm going to go down here to H21 and scroll up to the revenue, and when I hit enter, that'll go down to 0, and now we're out of balance. And then we'll go to the capital account in H18 equals the income summary. Whoops, I'm sorry, not the capital account, the income summary account. And we're going to go up to the income summary, and we're just going to move that income from here up to the income summary. So now we have net income, or just income, sorry, revenue in income summary. Now we're going to do the expense part. So the next journal entry of the 4-step process is to close out all the expenses. All these expenses have debit balances. Now, I mean, we need to make these go to 0. So we could think about this one at a time. That's a debit, we need to credit it. I'm going to copy this, I'm going to skip a line, I'm going to put it on the bottom, and that has a debit. So if I credit it 405, then if I post it, I'm going to post this as we go this time because it's going to be a long journal entry. I'm just going to do whatever I have to do to make these accounts go to 0. So of course that would be a credit of 405 would make it 0. I'm going to do whatever I have to do to make this go to 0. That's a debit, therefore I got to do the opposite thing to it to make it go down to 0. So I'm going to credit it for whatever's in there, negative 1352. And I'm just going to post this as we go. So I'm just going to say, is that what I need to make it go to 0? We say that equals this number, and then enter, that makes it go to 0. So I'm just going to, what do we need to do to wages to make it go to 0? Well, that's a debit. We're going to have to credit it to make it go to 0. So I'm going to go to wages. We're going to credit wages for whatever's in there, which happens to be 3625. Then if we post it, equals wages, and that should make this go to 0. Insurance expense has a debit of 495. We need to make it go to 0, so we're going to do the opposite thing to it, which means we're going to credit it 495. If we post that in cell H25 equals the credit, makes this account go down to 0. Rent expense has a debit of 2430. We need to make it go down to 0, so we're going to credit it for 2430. We're going to put our cursor in H26 equals the 2430, making it go down to 0. Computer supplies has a debit of 3415. We're going to do the opposite to it. We're going to credit it 3415. If we say this equals and we post it now, the credit, that's a debit, that's a credit, that's the opposite, it's going to make it go down. Advertising has a debit of 2643. We need to make it go down. 2643 in the advertising. And then if we post that, it's going to make that go down. So I'm just going to do all these at one time now. So now we got the mileage, the miscellaneous, and the repairs. Notice that the expense accounts all have debit balances, and we're making them all go down by doing the opposite thing to them. And then if we post these, I'm going to say this equals this number, this equals this number, this equals this number. So now we're out of balance by the expenses. If I add all these up, we had expenses of 16,457. If I put that in the debit, negative sum of all these, we need negative sum. So I'm just going to flip the sign like so. We need a debit, so I'm just adding these up. And I'm putting a debit here because we need to have an equal number of debits and credits in each journal entry. And where we're going to put it, we're going to dump it into this account income summary account. So I'm going to copy that. We're just going to put the difference into there so that we can then balance at this time. Something's in the income summary, so I'm going to double click on it, go to the end of it, and say plus, and then go to this income summary 16,457 and enter. Now we have 23,227. We're back in balance. What is that 23,227? That was net income before, right? That's what we had in net income before we closed this. And it's represented by this number right here. So, right, this is what net income was before. We had revenue minus expenses equals to 23,227. And we've grouped it all into one number, and we dumped it into income summary and put it here. This is important because later problems, when we have partners, will start to allocate the income summary. They'll say, well, the income summary has this, how do we allocate that between partners or something like that? And just remember what the income summary means then, after the income and expenses have been closed into it, is that is net income. Net income is in there and now needs to be allocated to the owners. In this case, there's only one owner, so that makes it pretty easy to allocate it. So we're going to take it out of income summary now and allocate it to the owner, meaning income summary now has to go down. So this is step 3 of the 4-step process. This has a credit in it. We're going to make it go down to 0 and put it into the capital account. So I'm going to make this go down to 0 now because it's a clearing account. We're just holding the net income in there to see that if we did this correctly before putting it into the capital account. So we're going to say this has a debit. So this should go up here. We're debiting the income summary for the 23,227, and then we're going to credit the capital account. Capital account has a credit balance in it. If we credit it again, we're doing the same thing to it, which will make it go up. This makes sense because the capital account represents the amount of money owed to the owner. The owner just earned 23,227 in revenue over this time period. Therefore, the amount that the owner could then withdraw has gone up. They've earned that money. So then we're going to copy this, and we're going to increase the owner's equity with a credit. So let's post this out. I'm going to double click on this income summary because something's in it. Go to the end of it, say plus. So we have this and this in there now. Now we're going to say plus this and enter. Makes the income summary go down to 0. Then let's go to the capital account and say equals, and we're going to go to the credit. That's a credit, that's a credit. That's going to make the credit go up in the credit direction to 91,227. Now the last step of the process is to get rid of withdrawals. Withdrawals represents the money that the owner has taken out for personal use over this time period. And once again, this represents the amount that's basically owed to the owner. This represents the amount that the owner has then taken out. So we're going to reduce the amount of draws to 0, and we're going to put it into the capital account, meaning reducing the capital account by the draws that the owner has taken out. So this is a debit. We need to make it go to 0, so we're going to credit it. So on the 4th step, we credit draws. I'm going to put it on the bottom with a credit, and we're going to credit it 7600, and we're going to debit something, that something being the capital account, which makes sense because the capital account has a credit balance. If we debit it, we're doing the opposite thing to it. Sorry about that. If we debit, we're doing the opposite thing to it, which means that'll make it go down, which makes sense because this is the amount that is owed to the owner, and draws are what the owner took out, and therefore the company no longer owes it to the owner. It also represents the book value of the company, meaning assets minus liabilities, which I'll show in a second. So then we're going to say the capital account, copy that, paste that here. I'm going to double click on the capital account. I'm going to go to the end of that and say plus and point to the capital, and that'll decrease the capital account. Then the withdrawals equals the 76, making this go down to 0. So now you can see after the post-closing trial balance is only the balance sheet. It's just the balance sheet. And everything on the income statement has now been closed into the balance sheet. So remember, the balance sheet is like everything. It's where we are as of a point in time. The income statement is more of a story of what is happening throughout the time period. We had to turn this story off so we can start the new story next time, counting up from day 1 of the new time period in January 1st and going towards the end of that time period. If we take a look at the balance sheet that we would create, and once again, the financial statements would normally be created and the adjusted trial balance, not from the closing trial balance. But I mean, if you were to make the financial statements from the closing trial balance, you would just have the balance sheet. So let's just do that real quick. I mean, we would just say the balance sheet is cash, and all these are in current assets here, and the current assets are the 52. And I'm just going to put this from the debit and credit to the plus and minus. And there we have those amounts. So we found a home for basically all of these. So I'm just going to say, yeah, we found a home for that. I'll make it green because we found a home. And then I'm going to say equals SUM, shift 9. And then I'm going to say shift up, up, up. I'm just summing these up, adding those up. I could double check that by adding these up. That's 68,227 because I included office equipment, which I should not have. So it's actually 6117. So that ties out. Now we're going to do the property, plant, and equipment, and we're going to do this in this format. We're going to say the office equipment and the accumulated depreciation, these two accounts are related, equals the amount we bought it for minus the accumulated depreciation, the amount that we have written off as of this time period. So the book value is the sum, or this minus this, which gives us the 76, and that's going to be the net equipment, also known as the book value. Then we're going to do the same thing for the computer equipment here, and then we're going to drag that down. So we have the computer equipment with costing this has a book value of, it's been written down by that, so it has a book value or net value of 19,875. That's why we have these contra assets, remember, because these two accounts are related. These two accounts are related. And this is the net of the computer equipment. Okay, so now we found a home for all of this. I'm going to make that green. And if we were to highlight the whole thing, if I was to sum up the whole thing, we have the sum of the current plus the property, plant, and equipment. We have 87,687. If I highlight all the green ones, this plus this plus this plus this minus this plus this minus this, 87,687. So that looks correct. Let's do the liabilities. Equals the payable, and I'm going to drag that down. So we have payable, wages payable, and unearned revenue. And I'm going to say negative because I want to flip the sign now from a bracket credit to a plus and minus format. We're flipping it, turning it from debits and credits to a plus and minus format, so that we can then, our users can then see it more easily in this way. So I'm going to copy this down, and then we're going to sum this up. And there's our liabilities, and we can double check that by highlighting these and saying, yeah, 40, yeah. And then I'm going to say we found a home for the liabilities, and we can make those, maybe make them yellow. And then the equity. And notice now, because we closed everything out, we only have one equity account. That equity account being capital, because we have one owner. The capital account, I'm going to say negative of this number. And then if we were to add up the total liabilities and equity equals the sum of these two, then the assets equal the total liabilities and equity. Notice, once again, if we were to create the financial statements from a post-closing trial balance where we closed out the income statement, there would be nothing in the income statement, because it's a timing statement and we closed it out. So in real life, obviously normally we would make the financial statements from the adjusted trial balance and then close out the trial balance to start the next time period.